I was trying to find a way to kind of describe and highlight the state of limbo that we are in right now when it comes to these trade relations between the U.S. and China. I guess I want to show it through picture. And we have this map on the terminal here. You can find it through the BMAP function of the RB Eden. This is the ship carrying sorghum, which is literally riding the waves right now, given this fractious relationship between China and the U.S. over trade. First, it was heading out from this terminal in Corpus Christi, Texas. It was initially bound for Shanghai. And then after China slapped these 179% tariffs on imports of sorghum, it performed this kind of U-turn, and then it headed back to Southern Africa towards Europe as well. I mean, what a turnaround it really has been, and this kind of state of flux that we are in right now. You add this geopolitical risk like this Singapore summit now being canceled. How much further complications does this bring to the U.S. and China trade relationship?
Well, you're absolutely right. The agricultural commodity piece is one that's very difficult for our companies to be able to plan around. These agricultural contracts are signed years, sometimes a year in advance, so when short-term tariff action takes place, the ship may already be at sea, and they'll have to reroute to another port. I think when we look at the North Korea situation and Vice Premier Liu He's trip to Washington, D.C. last week, what we see is that the two sides are in a bit of a detente currently when it comes to the trade negotiations. On one hand, they wanted to make sure that they had a positive platform for engaging with North Korea, which was going to happen on June 12th. Clearly, that's no longer or potentially going to be delayed a little bit further. The second point is that they wanted to give China a bit more time to come up with a better list of deliverables that could be offered to the Trump administration. As we know, Secretary Mnuchin, Ambassador Lighthizer, Peter Navarro came to China as a group. They had some requests, and then immediately after, less than a week, Vice Premier Liu He came to the Washington, D.C. It's difficult for the Chinese to be able to find consensus internally on the types of deliverables that they can offer to the Trump administration if they don't have time to coordinate in the interagency. So I sense that there's a period of time here where we'll give the Chinese a little more time to come up with a better list on how they can reduce the trade deficit and potentially lower some more import tariffs, which we've begun to see already.
Right, we've seen that, but on the flip side, we're seeing the U.S. now considering slapping car tariffs on auto imports into the U.S. You know, this seems like a much bigger issue than steel and aluminum. In the case of a national security case, I mean, is it really justified to actually say this is a national security issue when it comes to cars?
I think from the U.S. business community's perspective, we are strong advocates against ever using national security for protectionist purposes. That's both in the United States, whether through it's the updating of CFIUS and the FIRMA bill, whether it's in China through its national security review for investments here. We just want to make sure that governments have very scientific and rational reasons for why they're assessing the security of a product. And in this case, we would hope that level heads could prevail to allow for trade to continue without these kinds of restrictions in place.
Right. So, Jacob, is this what U.S. businesses actually want to see from the Trump administration? I mean, at what point does, you know, the Lighthizers, the trade hawks out there actually focus more on the structural issues which U.S. businesses actually contend with when it comes to market access, when it comes to investment, when it comes to IP?
Well, you've hit on the right issue there. From our members' perspective, the trade deficit and tariffs are definitely not the top priority. It's always great to see American companies selling more to China and to see the trade deficit lower overall. But now that we have this initial agreement in place, now that the Chinese are very clear on what President Trump's priority is, lowering the deficit by $200 billion, we're hopefully can quickly pivot back to the structural issues in the relationship, whether it's the market access for companies in securities trading and insurance, lowering the restrictions on joint venture requirements in several sectors, whether it's looking at Made in China 2025 and China's industrial policy, domestic tendering policies and how they require domestic content for public tenders and biddings at hospitals and other government contracts. These are the issues that our companies are much more concerned about. Oh, we can't forget cybersecurity and data localization as well. These are the ones that our companies would like to see raised now that we're getting some space in the tariff,
right.
In the tariff area.